Alrighty, let's dive into mistake number one, which is trading from weak structure. Now, it's quite a common mistake, but the good thing is it's a reasonably easy one to fix. So on first glance, if we look at this supply zone, it looks pretty decent, right? It led to a break of structure, which means that a fair amount of money must have come in, right? A fair amount of supply in order to achieve that, a decent amount of momentum. Arguably there's a bit of a mini double top there, so we can say that it has potentially swept some, a decent amount of liquidity there. So it looks pretty decent. So why is that failing if you're looking to get short here and price is blasting straight up? And that's because you need to zoom out and look at the bigger picture and realize that the overall trend, swing trend, is actually bullish. You don't even need to be doing multi-time frame analysis or anything like that to see that, right? If we zoom out at the bigger picture, we can see that price is starting to make higher highs and higher lows. Price has already pulled back. So now when price is coming up towards this high, this is a weak high, right? Because it's failed to take out the swing low. So now you're trying to short against the trend. So if I zoom out, all right, what you will see a lot of the times is people are continuously trading from weak structure, right? They'll be really zoomed in this area, thinking, this looks like a pretty decent supply zone. It led to a break of structure to the downside, a lot of momentum, and they're looking to get short from here. But what do? They get smashed. Why? You're trading from weak structure, right? This is the swing pullback. The pullback is now complete. And now we're ready to do what? To take out the weak swing high, but you're trying to short from here and are getting smashed, right? For those of you who have watched some of our old videos, you should be quite familiar with these diagrams where how do markets move when they're bullish? They pull back and then they target the weak high, right? Supply and highs we expect to fail, right? We pull back to demand, and then once that pullback is complete and we're moving to the upside, this is now a weak high. Why is it weak? It's failed to do its job. It's failed to break the low. This is a strong low because it's broken the high, right? So when price pulls back into that strong low, we expect the low to hold, we expect demand to hold, and now when that pullback is complete and we're making that next swing leg to the upside, this is a weak high, we expect that supply zone to fail, right? And so on and so forth. And then, the reverse for supply, right? The highs are strong because they break structure, so when price pulls back up to them, we expect them to hold, but we want to target those weak lows where supply is. Okay, so it's a simple concept you can get your head around, but obviously in the markets, when you get more complex scenarios and you can be trying to trade the internal structure, right? After prices pull back up here, then you're trying to short here, the objective is complete, right? You're shorting against that, and price now wants to target that weak structure. So, when you go back to the realities of the market and the way price moves, a lot of basic mistakes is people get caught up in this. Again, trying to short from levels like this, looks like a lot of momentum come in, but it's a weak high. Prices pull back, and now we're ready to take that out, take out the weak high, and make the next movement to the upside.